My name is Matthew Mocorro, and I am your speaker for today's event, of course. Talk about one of my favorite subjects out there, which is to identify profits by leveraging options. All right, so we're going straight calls, straight puts. But what's unique about what you're going to see today, at least I feel it's unique after 13 years in the business, haven't seen an approach like this put together in one simple manner, is to identify and spend time on the underlying stock. All right, so that's what we're going to zero in and focus on. All right, so before we do that, I have to let everyone know, if you didn't know, that there I am, I've got my webcam going, is that trading in the financial market carries risk. I think most of us know that going into it, but this is something that we have to put out there. So I just want to follow the responsibility of being the host for the event and just let everybody know, only trade with risk capital, meaning capital that you may lose, right? That's what investing is, right? There's always a level of risk. No one is 100% when trading. That's just the reality, and we just got to put that out there to the universe, right? So now that we all know that, and we just have to do it, so might as well follow the guidelines. What we want to do now is let's make sure that everything is working exactly as it should be. So what we're going to do is just run through a simple sound check. Now you should see my webcam going. You should see a slide that says sound check, and you should be able to hear me clearly. If that is the case, then be so kind, in your panel, okay, which is found on the left of the screen, that's your control panel. It has a section that says questions, and then it has in brackets, enter a question for staff. That portal is your chat box, okay? That's how I can see your questions, answer any of your feedback, right? Just make sure that we're tracking along appropriately is by using that section there, okay? So it's private. Only you can see your comments, and only we can see them on our end. Nobody else, your fellow attendees, cannot see it, and that's to maintain your privacy. All right, privacy is very important, right? And we want to maintain that. So rest at ease. Every question is a great question. The only bad question is the one you leave with. Okay, don't leave with any questions. Now, everyone, it's important you test this now. Let's just make sure you're good to go. So everyone type in that question section. Give me some thumbs up. Give me hellos. We are live. I get that question a lot. Are we live or is this pre-recorded? Look, it's 12:07. You can see on my phone. 12:07, July 27th, right? So we are live with you. This is not pre-recorded. So with that being live, if I stumble upon some words, I do apologize in advance, all right? But I think we're all human, and no matter how much time and energy we put into this, sometimes mistakes happen, right? So I appreciate it. So we got lots of hellos. Elizabeth's with us, Bruce, we got Dave, lots of goods coming in, thumbs up. We got Belgium with us, cool. Yeah, so we'll have people from all over. Yeah, Tess, I've got you. Yeah, so I've been in the trading industry for over 13 years, going back to 2007 is when I began my journey. December 2007 to be precise. Let me show you this little trick too, okay? So this presentation is a little different than what many of you have probably seen before. I'm gonna give you the keys to the truck. So what that means to me is that I'm gonna give you a strategy today. I'm gonna give you a checklist you can print out, you can use, all without making a single purchase today. I was the chief revenue officer for one of the largest financial education and training technology companies for over 10 years. Put together a lot of programs, over $150 million worth of products sold underneath my guidance in my career. And ultimately what I found is that there's so many free resources out there that if you know how to put them together, you can cut the reliability or the reliance upon technology and software. Much of what I'm going to show you today can be used and could be traded and applied on all the free stuff that you have access to. Your broker's charts, free charting software available out there like TradingView. And in fact, I'm going to give you precise settings of how to set up your chart so you could trade alongside of us. So because we're going into that much detail, I want to show you how to leverage GoToWebinar in a different way. Now, everyone, if you see the screen now, I'm pointing to, I have a big old arrow pointing to a camera. Everybody should have this camera on your viewing window. And the beauty of that little camera is that you could take screenshots of whatever I'm displaying. You can take a snapshot of it. So if you find that camera button, I think it says screenshot next to it of the like, right? When you see that, you click it, and then whatever I have on the viewing window will save to your desktop. All right, so that way you can take actual screenshots of what I'm sharing with you and keep them in your library. So that way you can go back and use it. Okay, so I don't know who else does that in this industry. I'm giving you the keys to the truck. All right, so you can follow along. This is more so of an educational, actual strategy event versus a show and tell, then sell. People, you come into an event, they show you a lot of fun stuff, they tell you about it, and then they sell you something. Now, we sell services that are outside of this strategy. We sell trading signal services where me and my team, we leverage the strategy I give you, we go find the trades, we send them to you. Okay, so there is a, think about it as a VIP level concierge service, right? But I'm going to give you the strategy that me and my team use today. Okay, so if you want to go apply it yourself, go apply it. You want us to hand you trades, then you can subscribe to our service, right? But to me, we're not selling the strategy. I'm not selling the training videos of how to use it, okay? I'm actually going to give it to you, all right? So to help us along the way, we're going to leverage different assets along the journey, okay? So I'm going to give everyone a checklist that my team put together. It's a beautiful checklist that I want you to follow along with us. This is about me, okay? This is the last thing I'll talk about myself. I already said I've been in the industry for 13 years. I'm a momentum trend trader. I will always lean to the side of simple versus complex. If you came today to learn the most complex way to trade, that will take you months and months and months to learn, if you do learn to ever execute it. That's not today. Today's about simple. It's about repeatable steps to trading. That's my goal, okay? If there's any questions about my experience, type them in and I'll get back to you later. But other than that, this is the last I'll speak about myself. So what we're going to do is we're going to be jumping into the live market. You know, market's open, it's 12 o'clock, right? So we're going to be going into some chart work here, and we're going to be leveraging a free platform. It's a free version of the platform. And if you're familiar with it, it is TradingView. Okay, so if you have a TradingView account, this is what I use, but you can use this on any platform of your choice. And now on the screen, everyone should see my charts, right? So everybody see. So type in a yes if you can see my platform now. So I've just gone over and screen shared. So I'm getting spun up into, just want to make sure everybody's following. Okay, good. Yeah, sometimes I want to go from a website to just a PowerPoint. You know, I just want to always double check. Lean on the side of caution to make sure you are seeing this. Okay, good. Perfect. Talmage, Elizabeth, perfect. We got Bruce and a bunch of traders. All right, so if you have a trader in your name and you want me to give you a personal shout out using your first name, then feel free. You can type in your first names. All right, so we're going to be taking a look here, and I'm going to be giving you precise settings of how to set up everything on the charts as you see it here. Okay, now I'm going to give you all this little checklist. I'm going to pull this checklist up. And then in this checklist, it'll give you the keys to the truck, right? So that way you don't have to take copious notes and spend all the time trying to worry about if you got it written down properly. I'm going to give you the checklist that I use. Now, I've obviously memorized the checklist, and we've been using this for a very long time, but it's always nice to have a guide as we're walking through it, right? So that way you guys can have this link, keep it forever, doesn't go away. You can print it, put it next to your trading station, however you like to set them up, and then you're good to go, okay? But we're going to be using, and this is what's interesting about this strategy, is that it's applicable across any market class, meaning you trade stocks, you trade futures, you trade Forex, you trade cryptos. You can use this strategy. The only thing that's going to be different is the symbol, right? The symbol types. Okay, so right now I'm going to drop into, there'll be a section that says announcements. There's a link there. So everybody should see this little blinking red light under your announcement section. That is where you're going to see the checklist. I just posted the checklist. Okay, so there's a link in the announcement section. Just look in your control panel area. It'll say announcements, and that'll be from me. This is what the checklist looks like. Everybody type in me when you have the checklist. Everybody see it on there? Just make sure we get all the house cleaning items out of the way. Make sure you have all those tools. All right, fantastic. Okay, cool. All right, awesome. All right, so what you're gonna see in this checklist, and I'm gonna turn off my webcam just a moment. I'll turn it on back and on as I'm asking questions, just to try to get us a little bit more real estate on the viewing window. All right, so I'll be back with you live. So let's walk through this for a moment here. So effectively what this is the guiding light, your lighthouse of trading, right? What does a lighthouse do? It's a guiding light, keeps us off the rocks, right? It's funny, I live in the country here in Florida, just I call it the countryside, but we're just about 45 minutes north of downtown Orlando. Consider the country, okay, out in the country. My neighbor in their front of their house, the front yard has a lighthouse in the front of their yard. I'll have to take a picture and show it next time. It's a pretty cool looking lighthouse, right? So that way, I guess they can find their way home, right? Well, I want you to think about this as your guiding light. Now, there's iterations to this checklist. There's ways to take this checklist and apply it towards aggressive. Maybe you want to be more aggressive. Okay, this is very conservative. What you see here, what I'm going to walk you through today, is a very conservative way to find trades. Okay, now we're going to be spending our time, and as we walk through this, I'll explain, right? So this up top here is how we are searching for the next trade, right here, searching for it. So you're going to think about this in the terms of, first we got to find it. We got to find out what to trade, when to trade it, how to manage that trade. Those are the 1, 2, 3 questions that we answer every time we trade. What, when, how. This top portion here is what. What are we going to trade? That's what this helps us answer up top. It's a search criteria, okay? This bottom half section here is the actual when portion, okay? So just because we find out what we're going to trade, right, we got to know when is the best time to trade it. If we're talking about buying something, right, we got to find out what to buy. When are we going to actually buy it, right? So same thing if, you know, I spend a lot of time cooking. I love cooking outside, grilling out on my flat top grill. There's lots of fun gadgets you can buy, lots of fun little tools, from, you know, great spatulas to great seasonings and spices to different utensils to use, right? Different types of food to cook, right? There's just so much to choose from. So what I'll do is I'll build a list. I'll build a list of items, a wish list per se, right, that I want to buy for my grill, right, for my outdoor kitchen. And then I'll wait for it to go on special or go on a discount, right? What am I doing, right? I already know what I want to buy, right? A lot of you do this when you're buying a home or you're buying a car or you're making a big investment. You do your research, right? That research is finding what you want to buy. And then you go into a mindset or a phase where it's like, okay, I know what I want to buy. Now I've got to wait for the right time to buy it. I think too many people get stuck in trading because you just constantly are buying stuff. You're constantly just trading for the sake of trading. Trading is a noun, not a verb. Okay, I want us to be noun traders, not verb traders. Verbs means that we're just constantly doing stuff, right? It's an action, all right? We don't have to be doing that. So what you're going to see today is a systematic, repeatable process to answer those questions: what, when, and how. Now, the bottom half here is how we select the best option trade. So we're going to find the best underlying stock poised to break out. Once we find that underlying stock poised to break out, then we're going to drop down and choose the right option chain. Most people trade the bottom up. You start worrying about what option, and you're just trying to option anything for the sake of optioning it. Okay, we're not going to do that. We're going to do it a little differently. So we're going to start from the top down and identify those breakouts. Okay, let's find the breakout, and then we'll talk about deploying the best option chain, right? What option do I buy? That's what we're going to do. Okay, so if you don't trade options, that's fine too. If you don't trade options, then stop right above this option chain selection. Okay, but I just want to give you all that, give you the checklist so you have it as a guiding light. Now I'm going to go into, and we'll start with some basic setups here. Okay, so we're going to start with, I'm going to get rid of some of these indicators. Now we're using some very simple indicators here for one reason and one reason alone, and that is to keep things repeatable, right? So we're just going to look at, we'll look at this index here. This is the Qs. This is the NASDAQ 100. This is an ETF. It's a very liquid symbol. So here's today. Okay, I'm on a daily chart. The majority of my time is spent on dailies. Yeah, so I got a question coming out. How do I hear something? Well, I wish I could help, but you can't hear me. Hopefully we can just turn the volume up. So here's today. You can see the date on my screen. It's the 27th of July. This is an active bar, okay, meaning it's not closed yet. This is today. The magic question we have to answer is we have to understand which way this thing's heading, okay? So what we're going to do is I'm just going to give you a brief walkthrough of the template that I use on every symbol, okay? It's very simple. There's so much resource out there, so many resources about this moving average strategy. Now, what we do is we layer in 4 dimensions of trading. So effectively, what we're going to be doing is we're going to be following this mindset. This is the market breakout formula that we're going to be leveraging. The market breakout. We're going to look for a very specific surge in volume all the way down to the individual symbol. Now we're going to be highlighting stocks and option trading today. But once again, this is applicable off any market class. We want to know when an individual stock experiences a surge in trading activity. We want to know it. Then we want to get the direction right. Is this a bullish directional breakout or is this a bearish directional breakout? these two pieces of the formula, there's 4 steps. This is the first half portion, which helps us identify what we're going to trade, what to trade. We want to find, always aware of which stocks are experiencing a strong surge paired with the right direction to pay us, right? How do we make money on a bullish breakout, right? Well, the price goes up. Okay, so we want to ensure that we've got a simple mechanical approach, a math-based approach to know, is the price trending up or is the price trending down, right? That's all we want to focus on. Do we want to buy something that's going down? Of course not, right? Do we want to buy something that's going sideways? No, I don't. I want to find trending breakout prices, right? That's what I want to do. Once we understand that, all we have to do from that point is time the entry and then manage our profit and risk. That's all we have to do at that point. The hardest effort, the most effort that we're going to spend is going to be focusing on what we're going to trade. When to trade it is very simple. I'm going to give you exactly how. In fact, I already gave it to you, right? I gave you the checklist, how to set up these entries. If it doesn't make sense on how to do it yet, don't worry. It will when I walk you through it, okay? But you have the keys to the truck, the keys to the castle in front of you with the checklist, okay? I just want to walk you through and elicit exactly how this is performed, right? But this is the overarching formula. Now, why volume surge? Well, that's how the markets work, right? When there is a surge of trading activity, when there's more buyers than sellers, which way does that price go? It goes up. Today, we're seeing a down move today so far, right? The Qs, the SPY, the Diamonds, and the Russell 2K. I'm sure the Dow Jones Industrial Average is bearish today. What does that mean? Are there more buyers or more sellers today? Type in the question section. Are there more buyers today or sellers today across those indexes? That's right. There's more sellers today, right? Price is going down. There's more people selling than there are buying. That's what makes the price go down. I'm in Florida. The housing market is crazy here, crazy bullish here. There are more buyers than there are people selling. So what's happening to the real estate prices here in Orlando? Well, they're going up. Okay, it's crazy. It's going up. We just bought this house that I'm in right now in the end of April, and it's already up 10% in the last 3-4 months. 10%. If I was into flipping, we could flip it for a nice penny, right? But we just got settled in. I'm not selling it, right? But that's what happens in the real estate world. Look at the auto industry. Auto industry is crazy right now too because of the lack of chips coming in after COVID, right? There's massive shortage of new cars, new trucks. Can't get them off the lot because there's no chips to drive them, right? No, Peterson, you can actually, you got a question on the checklist. I'll post that link to you again. There's that link. That's a link you can have. It's yours. You download it. Once you have the link, it's yours forever. Save it, print it, whatever you want to do. Okay? That's what moves the market. I'll give you some real sense of that breakout happening now, right? So this is a free account. I want to highlight this. I'm now back to TradingView. And here's today, right? This is clearly showing you that we are seeing a bearish market. I love it. The SQQQ is going up today, right? That's the inverse Qs. That's going up. That's correct. I love it. That's right. There's always a way to find an index going up. You just switch to the inverted, right? So the SQQQ is going up because the Qs are going down. I love it. All right. You're welcome, Peterson. No worries. Now, I'm going to introduce you to volume. Volume is the most underrated, underutilized indicator, piece of data for retail traders. Retail traders underutilize volume to your benefit. So we're going to stop that today. Volume is a leading indicator. It is not a lagging indicator. It is not just a data point. It is a massive, massive tool that you and I can use to identify the next pending breakout. So volume, volume, volume. That's one of the keys to the castle. When put together, gives you amazing insights of what's happening. Okay. If there's one thing you walk away with today, one thing, if there's only one thing you leave with, I want you to leave with a new keen insight and passion for reading volume. Okay. So let me give you an idea. I'm going to go to another free resource. My whole goal here, this is not a paid account of TradingView. I'm not an affiliate of TradingView. I don't get any compensation for talking about TradingView whatsoever. But it's a free resource. I don't have a paid account. There are paid versions. I don't have it. I don't need it. Okay. Another amazing free resource out there is data found on Yahoo Finance. I'm going to show you what volume does to price. Okay. Now, this is not a strategy. Okay. We don't just go find the top volume and just buy it. Okay. That's not what we're going to do. We're going to layer on multiple sets of data together, combined together. That is our strategy. Okay. This is just explaining how volume impacts price. All right. So I'm going to go to their free screener on Yahoo Finance. I'm going to pull it up for us, and that's going to allow us to look at trading data live. Okay, so this is going to be live data. It's coming in live because the market's open. I primarily trade at night when the market's closed. That's when I do the majority of my trading, and I'll show you why in a second. All right. But what we're going to pull up is a simple top gainer and a top loser screen, just to show you what happens when there's a surge of trading volume. Okay, so I want to quantify the search and what describes a volume surge and what doesn't. Okay, so down here, I'm going to show you today's top losers. Okay, we're bearish today. So I'm going to show you the top losers of the day so far. This is in the form of a percentage loss. Okay, that means a dollar loss. So this is the stock name. This is the symbol. Where my cursor is. So I've got the symbol name here. I've got the name of the company here. I've got the price. That's the intraday price right now. Okay. At the end of the day, this is not live, right? But we're in the live market. It's 12:32. You can see my clock, right? So we're live. This is the dollar move and change, right? And then you have change percent. So this is a simple list of the top losers of the day. So simple to read. Brilliance China Automotive Holdings is down 20% today. That's the biggest loss. Yeah, most are Chinese stocks. Yep. This is where I want you to really focus. This is where the magic is, okay? This is where we start to define volume surge. So the volume is describing to us is the data of the number of shares traded today. That's the number of shares traded. So for Brilliance China Automotive Holdings, 892,000 shares today traded. May sound like a lot, may sound like a little. It's all based on your interpretation. We need to have something to measure today against. Okay. The next column, it says average volume. That's a 3-month. I don't go 3 months, but this is a data point, and this gives us a base of measurement. So the average day over the last 3 months for this symbol is only 67,000 shares. So we're talking over 12 times the typical volume today. 12 times, 12x. That's a surge, is it not? Stock price is down 17%. Let's go to the next one. Full Truck Alliance. The average day is 6 million. A whole day, an entire 6.5 hours of trading is 5.9 million, almost 6 million shares. We are already at, for the first 3 hours of the day, already at 5 million. So are we going to trade beyond that? Of course we are, right? We are surging right now. Day's not over yet. But you can see the trend is that we're going to have more shares than normal today. Stock price is down 17%. Go to the next one, 802,000 versus 454, right? We're already halfway here. We're going to hit this number. Go down to XPeng, right? 26 million shares today already. The average day is 15 million, right? We're almost double the normal day. Look at that stock price drop 15%. That's surge. Let's go to the opposite side, okay? Let's go to the top gainers of the day. Believe it or not, there are stocks that are going up today, right? Even on Monday, last week when we had a big sell-off, or was that this week? What day is it today? Today is what, Wednesday? No, today's Tuesday, right? So last week we had a big sell-off on Monday, remember? Right? There were stocks that went up on Monday last week. So when we look at a top gainer, day gainers, right, the way they describe it, you're going to see the same, okay? So there are stocks that are gone up today. You've got a stock up 11%. APG is up 11% on the day. What? Nice. That's a nice trade, right? The average day is 903,000 shares. Today, 2.2 million. Okay, that's over double the normal day. Stock price up 11%. Let's go to INOV, second on the board. 397,000 shares is the typical day. Today, it's at 1 million. Okay, so we're talking almost 3 times, right? 2.5 times the normal volume. Stock price up 10%, right? Go to the next one. You keep going up and down the list. Tall, 23 million. Today, 64 million. 8.6% on the day. On a bearish day, right? The market overall is bearish, but you have stocks that are surging in volume on the buy side. Up and down the board, you will consistently see a surge equating to a big move, even on a bearish day, right? That, my friends, is the power of volume. Bullish or bearish, we're looking for identifying breakouts. Now, the beauty of trading options is we don't have to short a stock outright. We can buy puts. We can buy puts. We can buy calls. So we can directionally trade without actually having to short a stock. I don't short stocks. If I find a bearish stock, then I'll find a put. I'll buy a put instead, right? I've got Dave saying earnings on INOV. Sure, yeah. Earning season, okay? To me, I don't follow fundamentals to the degree of trying to anticipate sentiment, right? Because that's subjective, right? That's subjective. So I look at data, right? Because what you're seeing, if it's earnings, right? You're seeing that the market is on the buy side, right? I wouldn't have to know that there's earnings today. I would know that there's a lot of enthusiasm for INOV because I can see the trading activity, right? So this approach is identifying these breakouts. So how do we translate that? How do we translate that to the charts? Because these are already breaking out, right? These are already have left the station, right? So, right, you're running to catch the train. We do have trains in Orlando. And I've missed a train or two in my life because I showed up late, right? The train already left the station. It's gone, right? If you ever missed a flight before, an airline flight, right? That flight has left the terminal, right? It has left the bridge. It's gone. It took off, right? Our goal is to get ahead of this breakout. So what we look for is we look for a surge of trading activity hitting the market. So I want anybody in this room now, I want everyone to take a moment and type in a symbol. Type in a symbol into the question section, and I'm going to pull it up in front of us, and I'm going to take you step by step through the strategy. And I'm going to let you all call it. I'm not, these are not going to be pre-set up. I'm going to go straight off of whatever you all type in. So just type in symbols. I'll see if there's any consistency. and then I'll pull them up, and we'll go through chart after chart after chart after chart. Okay, I'm going to teach you this strategy because we're going to identify what. So we've got Baba coming in, Alibaba coming in. I've got AVXL. I have PRU, SRNE. Let's see, we got Apple. There's several Apples coming in. FedEx, NVIDIA, VIX. I've got another Apple, Oracle, Tesla, Wells Fargo. Wells Fargo. Man, that's kind of crazy, right? TSCO, SLV, Silver, nice. Bark, Uber. Man, we got lots of them coming in. Okay. So the biggest majority I've seen is lots of Apples. They got a couple Teslas. Pfizer. I like Pfizer's. Rune, Google, Micron, one of the most actively traded stock symbols out there. Lots of options liquidity. Moderna, DraftKings. Wow, another Moderna. Okay, so it looks like we got Moderna, we got Apple. All right, so let's go to Moderna. Let's see, mRNA. Let's type that in. We'll start there. So here's Moderna. Oh man, how fun is this? All right, so the first set of indicators. So we're using indicators. I'm going to use volume. These are all free indicators. This is, you don't have to use TradingView. You can do this on Thinkorswim, which I use. You can do this on any Fidelity charts, Charles Schwab, bar charts if you have that. I mean, Yahoo Finance charts, doesn't matter. I mean, these are very simple indicators on purpose. So the first one we're using is a simple volume indicator. That's what you see on the bottom of my screen. All right, this is the only indicator you should see is on the bottom. That's the volume. Okay, now what I have here is I've got this set, if you're going to follow along, I've got this set at a column. Okay, so I've got the type of indicator is a column volume. This is not an EMA. This is a straightforward volume. Okay, so it's volume by itself. Then I've got it set to columns, and I'll explain why. Then I have my input as a 20. The length of the moving average is 20. So I'm effectively, because I'm on a daily chart, I'm going and measuring 20 days of an average day, right? So I'm taking the last 20 trading days and generating an average. So down here, you'll see a little red trend line. That red trend line is that rolling 20-day average. So I can go back historically and see what was that average on that day. So for example, I've moved my cursor to June 7th. And on June 7th here, you can see the data that's next to the indicator. So as I move my cursor, you see the volume indicator right here on my screen. There's data, right? And as I move my cursor, and remind you, I'm on a daily chart, okay? So each bar is representing one full day, open, high, low, and close. As I'm moving it, those data points are changing. So the left number you see of the two, right? There's two numbers. The left number is the day, right? So if I come back to June 7th, on that day, there was 19 million shares traded. The number to the right is what the 20-day average was. So on that day, there was 19 million shares traded against an average of 7.6 million. Okay, so we're talking 2.5 times, 2.7 times the normal day, right? That's a surge. So how you see that represented is when the columns are above that trend line. Okay, so it makes it very simple to see the surge. The surge is when we see the columns above the average. A low volume day is when the columns are below the red trend line. So when we're identifying the activity, look at these bars, okay? And I want you to see the difference of the swings, the high-low price move. So here's a low volume day on July 13th, right? You see how we're below the columns, 4.1 million shares on the day versus 7.5 million, okay? That's a subpar trading day. That's below average, right? Look how tight that high low is. So we had a high of 239, a low of 233. That's $6. $6 on a $200 stock. Okay, so we're talking a third of a percentage, right? Versus you come to this big column on the 20th of July, my birthday, actually, right? That's my birthday a week ago. And 123 million shares. 123 million shares versus an average of 17 million. That high-low swing from the low to the high equates to 16%. A 16% high-low swing. Why? You're talking 5 times, 6 times, 7 times the normal activity. That's a lot of volatility, right? Go to the next day. The next day, we had another surge of 30 million versus 18. Okay, so almost double. You saw a price surge, high-low swing of almost 10%. Historically speaking, I don't care what symbol you look at, when you see volume bars above the average, you're going to see an average larger price swing. That's how the markets tick. That's how any financial market ticks, right? So if we can identify the pending activity, right, we can see a boiling point. And I like to use the boiling water analogy. Our goal to leverage volume as a leading indicator is to look for that activity. So let's think about boiling water, right? Maybe you're making some pasta, right? We had spaghetti last night at my household. We got to boil the noodles, right? So you have to get some water boiling, right? So what do, right? You get your pot, you take it to the sink, you fill it with water. Cold water is what I've heard, right? Cold water. And then you fill it up to the appropriate level. Then you go put it on the stovetop. Then you put it on high. Maybe you sprinkle some salt. Maybe you put a dab of olive oil in there, right? You cover it so you can get a faster boil. And then you turn it on and you wait. Now, I don't recommend you do this a lot, but if you were bored and you're sitting there wanting to watch the water come to a boil, you're going to see telltale signs that the water's about to boil, right? It doesn't go from flat, tepid water to a raging boil, does it? Of course not, right? What happens? Well, if you took the time to watch it, you're going to first start to see the water get cloudy. You're going to see the water cloud up, and then you'll start to see some small bubbles form on the bottom of the pot. And then you'll start to see more bubbles form, right, on the bottom. And then you'll start to see some slowly trickle to the top of the water. And then you'll start to see that more of those bubbles start coming to the surface. And next thing you know, you've got a raging boil, right? You know, the classic boiling over effect, right? You hear that water hit the stovetop and you go, oh my gosh, and you start running to the stovetop, right? Now, a simple trick if you didn't know is you put a wooden spoon across the top of that pot and the water will not boil over. There's some cooking tips for you, all right? But that is what we look for in trading. We want to look for that pending volume surge. So we start to identify that next leg move. So for example, I'm going to go back in time. Beautiful feature here of TradingView is I can go back historically and set up and remove the future. All right, so let's just use volume. Okay, I'm not going to deploy the indicators of trend yet. So let's act like we're back on the 14th of July. Bullish day for Moderna. We had 9.4 million shares traded versus 7. That is volume, right? We are above our typical day. Now, if you go back and look, we had a day before that on July 8th. Then we had 1, 2, 3, 4 days below volume, right? Then we had a couple more days below volume at that point, right? But watch as I fast forward and you start to see this is what a pending breakout does. Look, the next day, volume. You see how the volume's getting greater. See this? We had 9 million, then the next day we had 15 million. Let's add a day. 41 million shares. Look at the bars advance. 35 million shares. 123 million shares. Is there a buildup or what? Are we at a raging boil? Of course we are, right? It's led by volume. 30 million shares traded, right? That means there are people gearing up and ramping up their activity, another 23 million shares traded. So you can see what happens as a catalyst point. So if we can identify those pending moves, that's where we're going to start to see ourselves getting into positions with a faster breakout, which means we're in positions a shorter amount of times and we're capturing more percentage movements per trade. So what we have to do now is make sure we're in the right direction, right? So that's what a boil looks like. That's a raging boil. Look how much activity here in the last several weeks, I'd say several weeks, really starting about the 15th of July, 12th of July. So we're talking, it's the 27th of July. So really the last 2 weeks worth of trading, okay? You can see how it started to really build up enthusiasm on the buy side. So what we do is we introduce simple trend lines. So now we're just going to roll in and I'm going to add a simple moving average. Okay, now if you're familiar with exponential moving averages, you can use those too. All right, but my goal is to make this simple and repeatable. Now I've got my settings here. I've got 3 that I use. Let me explain this, right? One of the most difficult aspects of trading is determining trend. The reason why is because most retail traders feel the need to become master chartists. Now, I don't knock it, right? You want to be a master chartist, you want to be able to chart with the best. That's going to take investment of time, money, and energy to learn how to be a master chartist. Now, I come from a unique background where I was paid to be a chartist. As a chief revenue officer for, at the time, one of the largest financial education and trading technology firms, one of my major roles and responsibilities was product development. So that's creating products, services, from trading signals to trading rooms to educational products, technology offerings. That's what was under my leadership responsibilities. So as any great person, a great leader, right, I had to become comfortable and become a master at identifying if a product is going to work or not. So to do that, I've had to vet products. So I had to become a chartist, right, to vet the profitability and the usability of a particular program. So I got paid to do it for a very long time. Most people have to do the opposite. You've got to invest in a company, in training, education, development. So some people spend tens of thousands of dollars to be a chartist while you still have a job, right? It's not your sole focus in life, right? It was my sole focus. So what I found throughout the years is that teaching people how to become a chartist is very difficult. So in deploying simple indicators and combining them together can help provide consistency in how we identify trends together. So what we'll do is we're going to combine multiple time frames in one snapshot. We're going to look at a short-term trend, which in this example, I use a 10 moving average, meaning I'm on a daily chart. That means I'm looking at the past 10 days and what's that average price? What's that average price, right? That's all trend line is, right? When we're manually drawing trend lines, we are literally just identifying average prices displayed using a trend line, right? Which is a straight line. We can get very close. Now, I will never say that a moving average will be more precise than a hand-drawn trend line, a properly drawn trend line. It's just not the case. But most of the people that I work with are not scalping the market, looking for fractions of a percent in profit and moving on to the next trade. Most of the retail traders that I work with are swing traders, meaning you're in a position for days and weeks. So we don't have to be down to the penny. Okay, so we can get by using averages. And in fact, it makes it easier for us to get on the right side of the trade. So when I see this blue line here, that's representing the last 10-day moving average. Got a question on the Yeah, I see the lag. I'm going to, I'll make sure I wait for the screen to catch up. So good comment. I've noticed that as well. Okay, so I'll make sure I slow down the mouse moves. Appreciate that. I got a comment on why are the lower vertical rectangles orange and green. So down here, it should be red and green, but all this is representing down here. This is giving us and matching the color of the bar above. Okay, so this big column that's orangish red, that just is that color because that was a bearish day. See the candles? Green is corresponding down here. Okay, that has nothing to do with volume. That's just reflecting the color above it. That's all that means. So when I deploy this 10, what this is doing us is giving us a trend line. Okay, so let's go back to this initial breakout that I described on the 12th of July. Okay, so remember that example when I showed you the volume creep up, and then it started to ramp up to where we are today. So I'm gonna go back in time. I'm gonna come there. And I'm gonna zoom in so we can see this more clearly. All right, so let me explain this average. In fact, let me go back another couple days here. There we go. All right, so these blue lines is giving me the 10-day average price, okay? And the price it's measuring is the close price. The close price is the most relevant price. You know, when we look at these candlesticks, you have the open, the high, the low, and the close. Now, they're all relevant to their own degree, but looking at a pattern, looking at a trend, the most important price is where that market closed. Regardless of where it opened, regardless of how high it went, no matter how low it went in a given time frame, wherever it ended up at the end of that period is the most relevant. So as we look here on this day, and we see July 8th happen. Just as I explained down here on the volume, how you can get the average, right? So on July 8th, we had 8.7 million shares versus an average day of 8.1 million. That's a surge, right? The close of that day, you see the price next to Moderna right here in this corner is the close price. You see the open, the high, the low, and the close. Well, the close was $232.79. Well, if I look at the moving average on that day, on the 10, that blue number is $228.99. So did we close above that 10-day average? The answer is yes. That means we broke that trend line, right? We closed above the last 10-day trend. So from a trend perspective, that gets us on the bullish direction. Okay, that is considered a breakout north. So we had a volume move, right, above the average, paired with the closing price also above that 10. Now the 10-day is a short-term trend line. It's only 10 days. So it's a microscopic look at the activity. So what I'm going to do is introduce a second indicator, and we're going to stack these up vertically. So the whole goal of this is for us to look up and down vertically at the volume below, and then we look up and start to look at where the price is. Where did we close in relation to these averages? So I'm going to now incorporate the longer moving average, which is the 50. It's just a simple moving average, not exponential. So I have the 10-day trend displayed in the form of this blue trend line. And then I have a 50-day moving average shown in the form of this red trend line. So if I turn off the candlesticks for a second, if I turn off the bars and just show you the trend lines, The 10-day is going to have a lot more movement than you'll see on a 50 because a 50 is taking a lot more time, right? We're taking a longer average. Look how the price reacts. And as we stay above that red, you see how this stays bullish, right? So if I go back historically and show this, and I'm going to put more data on the charts so you can see them. When the blue line is above the red line, that's an uptrend. When the blue line goes below the red line, I want you to think of downtrend. Now, historically speaking, almost every stock in the stock market, historically, over the last 2 years, is up above what it was. You go 5 years, you go 10 years, you go 20 years. If a stock's been around for 20 years, 9.5 out of 10 times, that stock price is probably higher, right? I mean, that's just how the U.S. market works. So what we need to understand is when it happens on a shorter time frame, okay? So just getting rid of the bars, if we look at Moderna right now, are we in an uptrend or are we in a downtrend? We're in an uptrend, right? If I go to another chart, if I go to something like, let's go to Tesla. Are we in an uptrend or are we in a downtrend? Now I've got some additional analysis. I had a class last night. I'll get rid of this analysis on Tesla. Tesla's doing exactly what we said last night. All right. But if you see here most recently, where are we, right? We're on a small little uptrend here on Tesla. Now it's really in a consolidation, but overall, my 10 average price is above my 50-day average price, right? If we go to, I think, what was another one? Let's see. Pfizer was another one. Let's go to Pfizer. The goal of this, remember, we don't have to get down to the individual penny, okay? Unless you're trading millions of dollars, billions of dollars at a time, right? We're not worried about a penny, okay? We're worried about getting into a position where we can make 5 to 10% in 3 to 4 weeks, okay? That's where typically this strategy will put you. Let's go to something like Pfizer, okay? That was another popular request. Let's go to Pfizer, and let's see what's happening. Now, Pfizer is not $600, so I've got to come down to the price. There we go. And so what's happening with Pfizer right now? Is Pfizer going up? Is it an uptrend or is it a downtrend? There's Pfizer. I'm going to wait. I see the charts. GoToWebinar has been very laggy today. This is my third presentation, so I get it. Too bad. Citrix is a parent company, is billions of dollars, and they're running latency right now. I've got 200 up and down here on my laptop, so I know it's not that. So is it trending up or trending down? Right? Look at these charts. Okay. Now I think candlesticks can be confusing at times, right? But we need them. Okay, we need candlesticks to get our entries and exits. But you can see if I take them off, you see how much more easier it is to see what's happening. Now, I'm not going to introduce the third one, the 20. Okay, I think we go over that in class. So I already said it. We have a signal service program that we provide. I'll show you the results. If you like it, you can subscribe. We'll send you signals every day. And then we have classes every week. So I have classes Monday night, and I have classes Thursday at noon every week. So I continuously teach this concept that I'm teaching today while you get to follow along and earn while you learn. So we send you signals, you can follow them, take them, follow, right? So what I'm showing you today is real, it's applicable, and this is how me and my team find signals, is using the strategy. But you can see how it makes it simple. We can now go to chart after chart after chart after chart and see the opportunity and see direction with the same lens. That's how simple this is to execute once you understand the concepts of how it all ties together. All right. So sticking with Pfizer here, let's now introduce how to time this whole thing together. So it's clear to see that we have a breakout moving up. So what I'm going to do is introduce the bars again. And now we get the same effect, but now I also get the candlesticks working in conjunction together. So what we look for is we want to find ourselves at the point of the actual breakout. We want to catch these trades at the point of initial breakout. I got a question coming from Peterson. Are the classes recorded of conflicts? Yes, all the classes are archived. All of them. Every single one of them. We've been talking about here recently retracements, Fibonacci tools, okay? Not the traditional Fibonacci's that you are typically taught, but a different variation of them. That's what we've been working on the last several weeks in class, right? So if I go back again, and let me just take off the bars. Okay, let me just show you this one more time. When I look at a move like this, these trends can last a long time. So we want to be here. We want to buy at the breakout. Okay, so where this red arrow is pointing is where we want to buy. Those are where we can maximize our trades, both sides, bullish and bearish. So when we cross below from up to down, like we did back here, that's when we start to short or buy puts. When we cross above, that is a trend break, right? So imagine the price moving down, and then we get the price break at a key level, right? That is the point where we want to be. The reason why is simple. Nobody knows when the trend's going to end. Nobody knows with 100% certainty. Okay, you're going to learn in our classes that there are ways to find when that opportunity may be here. Okay, but there's no one that can say with 100% confidence that it's the trend's over. Nobody can do that with 100% certainty. So for us, if we can identify based on the data, combining simple techniques of trend identification, making sure that we've got a volume push in our direction, that's how we can find ourselves at these points of breakout. The reason I highlight this, and this is also a very important piece of your success, you must be able to diversify your symbols that you trade beyond the 5 to 6 to 7 to 8 that you historically trade. If you look at your trading account for my active traders, how many individual unique symbols have you traded in the last 12 months? Is it 10? Is it 12? Is it 50? Is it 200? Is it 100? Is it 10? Is it less than 5? When you look at how long these trends last, these breakouts, this is March 15th, right? This is end of March, middle March. This trend ran all the way to 25th of June, right? So you're talking 3 months, 3.5 months almost. Our most recent breakout started around the 13th of July, so that's only 2 weeks in. Our big sell-off here that we had, bearish breakout, was January 4th to March, right? So if I look at pure reversals, breakouts, there's been 3 this year. It's July. There's one in January, another one in March, and another one just now in July. Okay, 3. So how many times could you have caught a trending breakout for Pfizer this year, right? 3 times. If you traded Pfizer more than 3 times, you're buying and selling inside of these trends, right? You're buying and selling inside of here. The purest way to increase your success rate is to be patient and wait for breakouts. So if I go to something like Tesla, right? Go to Tesla. From a simple perspective of catching the most opportunity per trade, we need to have a mechanism to search and find, okay? So we need to be able to search and find all of those different price points, right? If we can do that, then we can diversify our trades and focus on catching breakouts at the appropriate time, right? So here's Tesla. This trend started in November, ended in February. So this year, 2021, right? There's one breakout, 2, 3. So we're on 4 for Tesla. So 4 times we've had that cross, and that's only a 10 and 50. All right, this is a trader setup. Institutionally, you'll hear people talk about a 50, 100, 200. That's a 50-day average stacked against a 100-day, stacked against a 200-day, right? Almost an entire year, right? That's an investor. That's you're buying and holding for months and months and months, okay? That's only 4 times for Tesla. So to give you an idea, I said we provide trading signals. So since August 5th, this signal program, almost an entire year, there's been 133 signals sent out in the last year. And there are probably only 105 of those are unique. So there's been about 5 or 6 trades that have been duplicated in the last year against 133 signals sent out, 133 trades that have gone live, right? So you're talking a low percentage of duplicated trades in a year, meaning duplicated symbols, because of the fact that we've got to be able to time these effectively. So the search criteria is where we now start to apply this. So let me show you how we find them. Okay, so it's in your checklist. So I'm going to show you what this looks like. Inside of TradingView, and you can do this on a multiple different platforms, but I'm just showing you this on TradingView. Bar Charts has another fantastic screener, and it's all free, right? This is free stuff. You don't have to have a paid subscription to TradingView to do what I'm going to share with you now. So right now, I highly recommend you take a screenshot. When it pops up, you'll see a screener. All I did is I clicked on the bottom left side, and it says Stock Screener. I'm just waiting for the lag here for you. And that's the thing as a side note, there's 2 feeds. You've got an audio feed with GoToWebinar, and then you have a video feed. So the video is behind the audio. Okay. So now everyone should see the screen. These are search filters. You see right here in this box next to the magnifying glass, it says search filter. That's exactly what we're going to be doing. We're going to search the market for stocks that match the criteria that's on the screen in front of you. So our goal is when we look for new trades, okay, there's really 2 hats you wear. There's the active trading hat. So remember a verb, right? A verb is a descriptive word, right? It's an action, it's an action word, right? Verb, running, to run, right? Run is a verb, right? It's an action. Then you have a noun trader. A trader as a noun means that's who I am. I'm a trader. Doesn't mean I have to always be trading to be a trader, right? So as the hat of an active trader, meaning I'm looking for a new position. I'm looking to enter the market, buy a new trade, right? Get into the market. And then there's other times to analyze, okay? So right now we have the hat of looking for a new trade. I want to find a trade for the day. So to do that, what I've got to do is I've got to search and I've got to drill down and cut through all of the thousands of stocks and find the best trade. So to give an idea, when I remove the filters, this is our effective starting point. So when I remove all those filters, it's going to show you how many stocks that we're starting with. And our goal is to chop that number down. So right now you can see there's over 7,000 you're going to see here in a moment as it pulls up. I see it pulling up. 7,925 matches. Okay, that's how many stocks we're starting with. So there's no wonder there's so much frustration felt by retail traders about knowing what to trade, when to trade it, and how to trade it. Choices. You know, for my Forex traders here that may be here, right, there's really a handful of pairs that you'll trade. E-mini futures is a phenomenal market because you're only trading a handful of E-mini futures contracts, right? There's only a handful of them. Come to stock trading, there's thousands. You know, there's more than this. This is only just stocks in the major indexes, right? Yeah, I'm going to pull it up again. Don't worry. I'm going to show the filters. I just want to show you the starting point. Okay, this is where we started, 7,925. You think about trading options, there's dozens of different ways to trade options. So when you think about the retail side, and most of us on the retail side don't trade 8 hours a day, even professionals don't, right? But we don't have a full career path of just doing this all the time, right? I mean, we're just not fully embedded and just trade all day long. So you think about how in the world do we manage it, right? We have to have a way to drill down to the stocks at the point of the breakout. Okay, we've got to know what we're going to trade rather than just pull a rabbit out of our hat, rather than just trade just one stock over and over again. I already showed you some of the issues that arise from just trading one, right? So how do we get to that point of breakout? We've got to be able to find them, okay? So I'm going to pull this back up so you can see this. So we go from 7,000 and we're going to be at 1. So we started with 7,000. I went back and set up that conservative breakout. Here's the filters. We have 1. Now you may be thinking, that's crazy. There's only 1. Is it crazy? Today it's bearish. What are we asking for? This is the settings that we're using. We're being very precise, extremely precise. Now this is taking in today. So this is taking in what's happened today versus the average moves for the market. So let me explain. So we're looking at the major indexes, the major exchanges here. Volume. So we're looking at stocks today that traded a minimum of 1 million shares today so far. Now it's live, it's 115, 116. So we're about almost 4 hours into the market today. That's one level. That's one layer of a filter. That's just one. Each one of these blue highlighted filters is layering in and cutting down the number of stocks that are going to show up. It's a combination of all of these together that's getting us our list for today. Okay. So we've got 1 million volume today. We've got an average volume. So now I'm taking in an average. So this is only going to display stocks that average 1 million shares traded over the last 60 days. Those two combined on the volume give us liquid stocks to trade. These are very liquid. These are stocks that have solid trading activity levels. So this is cutting down the number of stocks that are going to show up. We're not going to deal with those low volume stock symbols. Okay, now these next 3 filters are really cutting the market today. Okay. So what this is saying on this next one, it says last. That's the last price. So this is only going to give us stocks that the price has crossed up above the 10-day average. Then I've got another filter set below that. So now I've got simple moving average has to be above the 20-day average. Okay, this is going to give us an uptrend. And then I have another one below that, which is the 20-day has to be above the 50-day. Because of the bearish day today, you're seeing that when you combine all of these together, there is only 1. so far. Now, as the day goes, some more can fit into this category. We still have another half of the trading day, about what? Almost 3.5 hours, excuse me, to the day, right? 2.5 hours, right? We're coming up to 2.5 hour mark left, right? So there's still some time, more can show up. Now I got a question on the market cap. I'm not worried about market cap, I'm worried about liquidity of the stock itself. Okay, so if they're averaging 1 million shares, today they're already at 9 million shares, right? That's a liquid instrument. And you don't have to take it. I'm not saying buy this right now. I'm saying there's literally only one out of the 7,000 stocks. So for example, if I took out some of these, let's say I took out the last price above the 10. Okay, so if I take this one out, we're going to see more stocks potentially show up. Let's see if it happens. See how there's 98? So just as I said, the reason we're not seeing a lot of pull up today is because of that bearish move so far today, right? Now, today doesn't mean it's the end of a trend, okay? It's one day so far. Every market, every symbol does not move in a straight line. The market goes up, market goes down. So you see the number now is 98. There's Apple, right? There's Microsoft, Amazon, Google, Facebook, Visa, Johnson & Johnson, lots of big companies out there. Right? Lots of big name companies, lots of Dow Industrials, lots of NASDAQs, NASDAQ 100 stocks. Yeah, Peterson says, surprised there's no screen comparing today's volume to average. Yeah, so you can see that on the charts, right? But let's just look at these for a second, right? So what did I remove from the screen, right? I removed the 10-day price, or the last price moving above the 10-day average. So today, we're seeing much of the stocks move below the 10-day average. All right, that's what's happening to the stock prices, right? So if I come to the live market, let me turn this on and come to the charts, we're being very precise, right? You can see that the last price, that's a 30-minute chart. I don't need to be on a 30-minute chart. I want to be on a daily chart, okay? So you can see the daily chart has moved below the 10-day average. Everybody see that? We move below the 10-day on Apple. So this is not a day to buy. I'm not trying to get into this position yet. Now, I'm not saying it's a reversal. I'm not saying it's a downtrend. I'm saying if I want to get into a new trade based on today, this is not there yet. It's not ready yet to be bought. I need to see this market on the upside of this trend line, not coming inside of it, okay? So by having strict filter sets, it allows us to be patient. Microsoft, you're going to see the same look and feel. The price is not crossing above. There's Microsoft. So by having that filter set, there's going to be days where there's not a trade. It's going to be days that end up that way. Now we can inverse everything and look for shorts. So there was only one on the uptrend breakout. If I want to go to a bearish breakout, I can do that. I can just flip these indicators around and look for moves below. Okay, so now I can look for trend lines breaking down. So if I do want to be active and I want to switch directions, I can do that. So the checklist is a bullish breakout, okay, that I gave everybody, but you can also invert it. Okay, so you can invert it. I'll start to do it and you'll see it catch up in a second. And if you want, you can take a screenshot of this too. But all I'm going to do is flip everything around. So rather than the prices be above, the averages be above, I want to be below. And if I'm below, if the 10 is below the 20 and the 20 is below the 50 and I get the last price below the 10, then that should be a point of breakout. And then all I do is double check the volume to make sure I got a volume play. So let's put on the last price because there are 400 stocks that just search for and found. Let me add this final indicator set. There it is down there. And now we have a whole lot. Holy cow. 278. Alibaba. That was another request from the room. So we had one. Now I've got 278. 278. That's a whole lot, isn't it? All right. That just shows you the direction of the day today, right? Look at this. Is Alibaba bearish or bullish? Price below 10, low 20. I can put the 20 on. 20 is a yellow line, right? So I've got Alibaba for the last 3 days below all 3 trends. That's what bearish looks like. I'll wait here for it to catch up. So there's Alibaba. Big old break to the south. Bank of America is the next one on the list. What do you think we're going to see? It's going to look the same pretty much as Alibaba. See how we're below everything? Up and down the line. Intel. So Bank of America is going to pop up. So the whole focus is to time our entries. Now we're on a daily chart. So the confirmation is that we need to see the surge still happen. We still need to see the surge, the volume occur in the market. So timing is crucial. So what do we look for on the charts? Well, we just go to this column. So anything that is not above average, we're not trading. Okay. So we want to have a surge because prices will fall if there's nothing holding it up. Okay. So you'll see prices fall if there's no volume to hold it up. It doesn't mean it's a decisional sell. It's on a decisional bearish move. So if we're trying to catch a breakout, especially on the south, we want to have the volume surging above average. So today, for example, we still have, like I said, about 2.5 hours of the day. We're sitting at 21 million shares on the day for Intel. The average day is 24 million, right? So the odds are we're going to be over volume by the end of the day. So I use this at night. So what we do is we send out pending entries. So the checklist you'll see listed there, it says set pending entry. So right in the middle on the 4D trading checklist, it says set pending entry 1 tick above the previous bar high. This is a bullish breakout. The bearish breakout is to the south. To the south is where we want to be on a bearish breakout, right? But because the market's bearish today, there's a lot more choices that are going to present themselves on the sell side. The confirmation is going to be if that price continues breaking out tomorrow. Okay, so inside of our membership area, we provide video training lessons. They're short, they're about 6 minutes long, on how to set up these pending entries and exits. So we use the underlying stock to set up the actual options trade. That's how we're going to roll with this. All right. So what we're going to do here, all right, we're coming up to 1:30. I know the lag is making it less easy to follow along with me, and I understand. Okay. What I'm going to do for everybody here in this room is I'm going to register everybody here for our Thursday class. So today's Tuesday. So every Thursday at noon, I go through this whole strategy live in the market with you, just like we did today. But with this lag, I want to make sure that I can really deliver the content that I promised. So Thursday, I'm going to register you. If you don't want to go, just type in no, N-O, and I won't register you. But if you want to go and see this live, I can promise you we won't have this issue on Thursday. This is very rare that this lag, I haven't experienced a lag like this in a long, long time with GoToWebinar. I know it's hard to follow, so I want to make sure that I could give you what I promised to deliver, and I know it's difficult right now. If you want to join me, just type in yes right now, and I'll register you on us for Thursday. It's normally paid to get in there, but you don't have to pay to get in there. I'll make sure that you get registered and you can join us again Thursday at noon. I understand. I appreciate where you may be feeling the frustration because you want to learn it, but it's hard to track. I'm going to register everybody that's typing in now. I'll get you set up. So expect the registration, a confirmation Thursday at noon. So same time, but Thursday. And I'll give you the presentation again. I'm going to teach you the strategy again. And at that point, we'll be able to really hit this home run with you. All right, perfect. So lots of yes. Okay, great. So I'll make sure you all get set up. I wish I had control over Citrix. You know, they're $1 billion company. They're giving me this lag today. I don't get it. I was in 2 other classes earlier today, no issues, and they're lagging on us. All right. So I will do that. All right. So rest of these there. This is not a once in a lifetime only opportunity. So I'll get you set up for that. All right. So to give you an understanding of the process, okay, the process in which this is done, I'm going to show you. So I'm going to go to our membership site here and just show you exactly what a trade looks like. Because the end goal in mind is we want to catch breakouts. We don't want to chase the breakout. Chasing a move is where we get into trouble. What does chasing mean? Well, chasing means you go to Yahoo Finance. It's Eastern time, Gary, Peter. It's Eastern time. Okay, so same time today, but Thursday. Okay, so same time, but Thursday. So chasing is pulling up Yahoo Finance, looking at the top gainer, just buying it. Okay, that's not what we're trying to do. We're trying to get in front of this breakout you see here. So the goal is of the strategy that I'm teaching is that you'll find yourself in front of the stock making it on this list. That's where I want to put you, is in front of these breakouts. So ultimately, by consistently seeing the market with the same lens, consistently following that checklist over and over again, you're going to be able to find yourself in stocks that have these breakout days. So you can be on that board telling all your friends and family, man, I just caught that. Look at this is on top gainer and I'm in it. And you're going to say, out of the thousands of stocks in the stock market, I was in that position before everybody else did. That is what a breakout is all about. That's what it looks like. So when you're in these positions with us, as we teach you, like I said, Thursday is a class, paid class, comes with our subscription, but I'm going to give it to everybody so you can join us. This is what the trades look like. Okay, so let's go to some of our recent trades. So we had some Coca-Cola trades. And this is what we sent out to everybody. So we send out, this is the level of detail that you'll get. So we had Coca-Cola, and I'm going to show you the trading tracker here so you can see it. It's going to pop up here in a second. And then I'm going to put up the program. So you can see what it entails, but like I said, you're going to be able to come in again on Thursday with us. So what you're seeing here is our tracker. Okay, so this is for the options profit generator signal service program. We've got several programs that we support in service. This is one of my most favorite because I trade options all day and I love them. Okay, this signal program is the most detailed, most transparent program you'll ever see. Okay, so what we do is we find the stock. So here was Coca-Cola, this is July 14th. You'll have all of the historical trades. So my data miners, you can come in and to your heart's delight and see trade after trade after trade. So this program started back in August of last year. So we're almost coming up to our 1-year anniversary of this program. The very first trade signal we sent out was GameStop. Yeah, Des, this is not normal. I know the lag. Okay. Yeah, this is definitely not a normal experience, and I do appreciate the patience. But like I said, I'm at least glad that we're able to slow it down and you can start to see this, because then come Thursday, you're going to be a step ahead, right? So the very first trade signal, believe it or not, was GameStop. This is before it was a meme stock as it is today, all right? It was August 5th. All right, so you're talking almost 12 months of these signals coming out. So we tell you the symbol to trade, the stock symbol that we're going to option. We then tell you, are you going to buy the call or are you going to buy the put? Okay, so these are calls. They're very bullish conditions back then, right? So most of these are buying the call. When the markets go bearish, we flip and we'll start to send out more puts. Okay, so we follow the trend of the overall market. Then we tell you the exact option expiration month to select. Okay, so this was October 16th expiration. We then also give you the precise strike price to select. This is all following the checklist that you all have. Same process here is the same process we ran the entire year. Okay. We give you the exact price to trigger the trade. Okay, so you'll know the time to buy it. When do you buy the call? When the stock price hits the stock price trigger. You see all these dates on all the prices to the penny. You'll then also know how to protect your trade using the stop loss feature. So we teach you how to use the stock stop loss on the option trade. Then we give you the profit target, so you know when to close out your option trade. Here's the checklist again. I just saw your comment, so I'll drop that to you as well. I'm going to send it to everybody again, so you have it. This is how you're going to be able to tackle the market. So all of these follow the same checklist. So as of yesterday, we had 4 active positions, currently up about 16%. These 4 positions starting on July 7th. So these are our active positions. We have a Cliff, a call on CLF, a call on Dr. Pepper. We have 2 puts, one on MDRX, one on Palantir Technologies, right? So these are through yesterday. This is what the performance was. Today there's a pullback, so these will probably be a little lower. We had a pending trade sent out last night via text message and email, which was CX. I doubt this is going to hit the entry, which is fine. Okay, so you're going to find yourself in active positions, meaning they trigger, or they don't trigger and we're not in. Okay, so it allows us to wait and catch breakouts. If it doesn't break out, we're not in it. Okay, so it's a very precise method of trading. So it's relying upon the actual stock breaking out, right? That's what we want. We want the breakout. So the final confirmation is always going to be the stock price trigger. That's the entry strategy in the middle of that checklist that says 1 tick above, right? So CX, for example, at 8.24, it has to hit $8.24 today to trigger the option trade. So we also provide you the trade ticket. Okay, so we track all of these in our account. We have a special account that we use for all of these signals so we can track them based on the market. So when you click on it, we provide that trade ticket, an actual screenshot of it. so you can follow along precisely as we set it up. So it's basically copy and paste, right? So you're effectively seeing exactly how we have set up the trade, and you're going to see it is a unique way to set up the trade. We're using contingent orders. Now, if you don't know how to do it, we've got training videos of how to set these trades up, but you can see here on this screenshot the exact order that we set up the night before. So all of these are set up at night. So we send out these alerts between 7 and 8 o'clock at night Eastern time. So you have 12 hours plus to check your email, to check your cell phone. When we send you the text message of the exact trade, we send you the full details of the trade. And this is what it looks like when you actually set it up in your account. We track every single trade. So you can see it's got 3 orders in one order execution. So that way you have every piece of the puzzle lined up and into your account. So once you understand how to follow exactly what we give you, this correlates exactly with the checklist that we gave you. Okay, so this is where you come into the position to earn while you learn. So if you can follow instructions and learn how to place these trades, then you can follow along with us. Okay, that's the level of earning while you learn that's there. And then we track them with you, right? But this is the level of detail that I've yet to see in the industry, where you know exactly where to get in, exactly where to get out, and we all follow the same process. Because a big complaint about signal services that I've found over the years is that you can never match up exactly the results that you see. So in creating this program, we wanted to avoid that and be 100% transparent. And that's what you'll see here with this service. And the beauty is that this all follows, and you have access to this dashboard. So you can track every single trade. If you want to go data mine, you can go data mine all you want to your heart's content, because it's all there, right? And that's what I find to be extremely unique about this program. So we give you every piece of the puzzle in front of you. So that's what you have to look forward to. If you like what you saw so far, if you've seen this presentation before, you can jump in and join our team, and you've got all of the pieces of the puzzle in front of you. We're going to hand deliver you signals. You'll see here examples of what they look like. And like I said, you also have Thursday to really come back in, and I promise you won't have this lag effect, right? But this is the level of detail that you'll see. This is a screenshot of an exact signal we sent out and the level of detail. So you'll know the symbol of the trade. You'll know the strategy, we buying a call or buying a put. You'll know what expiration date to select on the option chains. You'll know what strike price. You'll know then when to go live, right? So the go live details are how you execute, when you execute, right? So you can do it manually, or you can do it how I like to set them up, which is an auto contingent order, right? But that's the level of detail you're going to receive. You get text message alerts as well as emails with all of the details. So that way you're not left trying to guess. You're literally in there. Yeah, and there's 2 programs. There's a daily, which is every day. We look at the market and identify setups, or there's weekly. Yeah, so got a question. There's some losses. Yeah, there's no 100% winners here. Yeah, so this program is about a 60%. Our total profits combined in August is 2675, so 2,675 net percent profits. Average wins about 70%. Average losses 30%. So you net it all out. Our average net after wins and losses on a profitability comes out to about 35, 38%. Average hold time is less than 3 weeks a trade. So every 3 trades following every signal, you're doubling your initial investment, right? So if you're investing $500 per trade, every 3, you're making $500 net. You're averaging $2,000 per trade. Every 3 trades, you're making $2,000, right? That's how you leverage those numbers. That's the daily. The weekly program is once a week. Every Sunday we'll send out signals. Daily is Every day we're analyzing the market, sending out signals. So that's the difference. It's all frequency. Weekly is once a week. Daily is every day we're analyzing and sending out signals. All right. But they have to check the box. If there's some days there's no signal because it's got to check the boxes, right? That checklist you see to get it to a trade is about 9 boxes have to be checked. 9 before a signal qualifies to be traded. So this is not a, one trade you're in, it qualifies because it checked one box. It's got to check all of them. If it doesn't check all of them, no trade, right? We're not sending one out. But that's the level of detail found, right? So it's all about sending them out, then it's got to trigger the entry. If it triggers the entry, then at that point, we're in the position. You've got your stop loss, you got your profit target. This is the most real, transparent program you'll be in. There's losses, there's wins. Our goal is to give you more wins than there are losses. And that's what we've done over the last 12 months, right? Average profit over the month is 300%. It's the average over the year. Some months when it's hot, we're rocking 1,200, 1,500% profits, net profits. All right. This example of Kraft Heinz sent out in May, right? 3 weeks, 100%. Doubled your money on that trade. So sent it out on Sunday, trade triggered on Monday, the next day. These are only valid for the next day. They have to hit the entry the next day. They don't hit it, they're off the board, right? So we are looking at a very specific list of stocks. We're looking at low cost stocks. These are all stocks with share prices less than $5. $5 of share price. So this makes it affordable no matter what account size you have access to. The average share price is $1.85. So we leverage momentum, we leverage trend. That's what's found in the checklist. Here's another example of what breakouts look like. When these things break, they break. That's 5 days, 64% on Westwater Resources. All right. Full transparency, right? That's the end goal in mind. So for those that requested to be in our Thursday class, we're going to get you all taken care of. We're going to get you all registered for that event. For those that have seen the presentation and you just wanted to see it again, this is how you can sign up. So this is the program. It's only $399 for the entire year. This is the daily options profit generator program. You can trade the stocks outright, or you can take it to the option. You have all the trade details in front of you. You've got a 60-day money-back guarantee. So if you're on the fence, not quite sure, you've got 60 days to go through this program. This also includes access to our trading room, which is done every single week, hosted live, over 100 sessions in an entire year. That by itself is worth more than the $399 by itself. Just look at any other single trading room out there. And the reason we're able to offer this low is because we've got hundreds of traders that follow along with us, right? So with the masses, we're able to allow and provide a smaller entry price to take advantage of this opportunity, right? So if you need more, come Thursday. You're going to be registered. Come back in live. Bring even more questions. We won't have this this lag effect. I can guarantee that with GoToWebinar, because I've never seen it this bad, and I've been using GoToWebinar for over a decade. All right, but I just wanted to let you know what program we offer. This is a VIP concierge service, so you do not need to have a purchase to learn the strategy. You're going to come back again Thursday. You have the checklist. I gave you the keys to the castle. You want to see how it's implemented, come again Thursday. I promise you'll see it. It's the same strategy I use every single time. So I know the back of my hand, been using it for years. Okay, so it's not new. It's time tested. And I'm excited to bring it to you again. For those that need that additional help, we'll do it again Thursday for you. For those that seen enough, you've got 2 months to go through it. There's nothing to qualify to get your money back. All I ask is that you tell us within the first 2 months. And if it's not, we will give you 100% of your money back. Literally 100%, no questions asked. We won't call and badger you. We're not that way, been doing this too long to set an environment like that. So optionsprofitgenerator.com is the URL. If you want to go check it out, feel free to do so. If you requested for Thursday, we already got you taken care of. I already saw a note from my support team that they're going to take care of all the registrations for us. You don't have to worry about doing anything for it, and we'll get you set up. All right, but I just wanted to walk you through briefly what the program is. So you know, if you want an added level of service, you can do that. To me, the classes alone are worth its weight in gold. And we walk through every condition. You'll learn how to identify trends. You'll know what the indexes are doing. You'll then understand exactly and precisely how to leverage this. We're looking for low price stocks here to option, meaning share prices sub $5. Okay, that's the goal, $5 or less. So to make it affordable, you saw Coca-Cola, you'll see some major headline companies come out there. Every one of these stocks are liquid. The options checklist portion will ensure that we find options that are liquid options. That's the checklist that you see in front of you, right? So those all stacked together, those 9 confirmations are what allows us to have such a high success rate in our performance because we're diligent to the checklist, right? And that becomes the repeatable process that we roll over and over and over again. It's $3.99 for the year. You lock this price in. So as long as you stay active, as long as you successfully build, you'll be able to lock in that $3.99 for perpetuity. It's up to you. You want to stick with it, stick with it. After the 2 months, you want to cancel, maybe you want to take a break, then just let us know, and then we can turn you back on. It's up to you. Okay. Great question, though. Oh yeah, no. Inside of the class, we walk you through step by step. Yep. Every piece of the puzzle. Yeah, we have stop losses on every signal. So yeah, Rich, great question. Arrived late. Along with the trade alerts, will we learn how to identify a good trade? Yeah, so the 2 classes a week. So it's Mondays at 7. We just changed the class times to 12 o'clock on Thursdays. Okay, so it's Mondays at 7 Eastern, Thursdays at 12. We teach the strategy over and over and over again. So that trading room is executing the strategy in the live markets, looking for the setup. So that way you can learn. My goal is to teach you to become an independent trader. There's no paid software. You don't need to have paid software these days to do what we do in this program. Free TradingView, if you want to use TradingView, that's what I use. You can get a free account. I don't have a paid account. It's all free. You'll see pop-ups in the presentation where it says, oh, upgrade now when I'm on TradingView because I don't use a paid account, right? And so I should walk you through how to identify trade setups because there's a lot of trades that present themselves, but I'm not sending out a $100 option trade. If you trade those, that's fine. You'll learn how to identify. Yep. The option share price are below $5. So the option contracts, right? Average price is about $180 per contract. Some are $350, some are $75, right? So these are lower priced options. So $5 or less. You'll be surprised at how many there are. There's a lot. And every single signal has a stop loss. Every single one of them. When we're wrong, there's no reason to lose the entire contract. We're going to cut, preserve our capital, and move on to the next trade. Proper trading. Got to have protections on our risk, right? And we've got to have a clear plan to exit. Because when we trade options, right, we have expirations to deal with, right? You can't buy an option and hold it forever, right? There's a contract expiration. So we need to have a definitive exit strategy to minimize risk if we're wrong with a stop loss, and then to know when to take profits. And we deliver all of them. They're all in your tech. Literally, you don't have to log into the membership site. You check your phones. You'll have every trade detail in front of you. We send them out every evening between 7 Eastern and 8 o'clock Eastern time. You'll get emails, you'll get text messages if you sign up for SMS with the entire trade on your phone or in your email, however you want it. And then you always have the trader's dashboard so you can see all the trades, so you can follow along. Average hold time is 19 days. 19 days. Average hold time. Yeah, we'll get you set up for Thursday. No worries. Yeah, you can wait till Thursday. Yeah, no worries. Yeah, no worries. Yep. I got a question. If thousands and millions of people are doing the same trading, would there still be enough money for these many people to make? Yeah, there are millions and millions of people that trade this market. When the Corona sell-off occurred, yeah, there was a surge of retail investors like yourselves entering into the market. The more people we can get on the same page, the faster these breakouts occur. Remember, there's thousands of stocks to choose from. There's dozens of ways to trade options. The breakouts are happening because we're finding the surge before the big breakout happens. So when you see these stock prices move, when we see a close and we hit 100% profits in a few days, it's because we got ahead of everybody else. When you think about finding the surge, where does the surge historically come from? The surge of volume doesn't come from the retail side. Outside of meme stocks like GameStop and Nokia and Sirius XM radio, those are very memey, right? Those are the ones that Wall Street bets are putting out, right? Those are erratic to the market. The majority of the major symbols that we trade, the institutional money is moving them. So what we're doing by leveraging volume is we're getting on their wavelength. We're identifying where that surge is coming in. So that allows us to catch those breakouts, right? Is catching that surge. So there's plenty of opportunity because there's always people that are not on the same page as far as catching, right? So what they're doing is they're buying at the highs. So they're getting in and they're creating the transactions to allow us to sell, right? Because there's two sides to every trade, right? There's a buy. So for me to buy something, somebody has to be selling it, right? Most of the time, those are people chasing, right? They see a breakout, they're buying in. What are they buying? They're buying what you and I are selling, right? And that's just how it works. So on average, how many trade alerts should we expect per week? So great question. So the way it works is every evening we're analyzing the market, following the checklist that you all have. If something qualifies, then we send it out. Now, because we send it out doesn't mean the next day it's guaranteed to hit the entry. So in a trending market, okay, so we were in a sideways triangle for about a month and a half. So we had a lower than normal hit rate on the entries. So we would send out a signal, but we would only have 60% of them hit the entry the next day. Okay, so we're analyzing the market every day. When the market's trending, you'll see 5 signals a week, 5 executed entered trades a week. When the market goes in consolidation or goes sideways, you'll see maybe 3 out of 5 trigger. So it's stock qualifying, then it has to hit the entry. If it doesn't hit the entry the next day, that trade is not entered, right? So that trade will come off automatically. No entry. Today, I don't think is a reversal. Today is a retracement, which it is due for, right? So average over the last 12 months, a little less than 12 months, I think it's about 3.5 trades a week trigger is the average. 3.5 a week for the entire year that we've had. Yeah, you can do that also. So you should also have, there's a weekly program and there's a daily program. Okay, so if you want to test it out, I would go with the weekly. You should have We'll send out a link so you can see the weekly version. That's just signal sent out on Sunday. So that's a once a week signal program. Yep, so you'll see that. Yeah, you want the checklist? Yeah, we'll give the checklist. So I see your comment. Let me drop the checklist to you. Yeah, no worries. No worries at all. Here's the deal. Look, you're not going to get heavy marketing from us. I'm not going to hit heavy sales tactics. Like I said, I've done this too long. All right. I've done that. And at the end of the day, we want to work with those that want to work with us. Right. So which way you've got to do that is up to you individually. This is an individualized relationship. You know, some people just don't resonate with the way I teach, the way I describe movements or patterns or strategies, and that's fine. You know, to me, I think finding that person that's going to help you is an individual relationship. And I think that's more important than any strategy. Right? So if you can understand the way that I describe things, if you can understand the flow of the words I use, the personality that I bring, that's more important than the strategy. Because for me to be in a room like this speaking to you, I've got a level of success. I have a track record. Any person, any company that you work with, they have a strategy that works. Sure, there's some charlatans out there that should not be sending you signals or teaching you, but that's a small percentage. The large majority of gurus, experts, trading professionals that are out there for you to follow, for you to subscribe to be trained by, they have a success track record, right? And so they have an ability to generate profits. The question is can they teach you to do it? That's really the question, because that's why I say it's a personal, individualized type of approach. No matter what experience level you have, no matter how long you've been doing this, if you can understand the concept, understand the words, the language, the tempo, the pace, that's more important than anything, in my opinion. Yeah, 100%. We'll honor any offer. We're not that way. So if you've seen this price, let us know. If you're ready, then we'll lock it in for you. We'll be here when you're ready. And that's our promise to you. That's one thing that I can guarantee. If when that time's right for you, we'll be here for you. Okay. We're not that egotistical, right? Where we're going to hold your feet to the fire like that. It's not how we operate. All right. So I'll post this checklist again to everybody. If you missed it, I've got some questions coming up about that. So, and then at that point, we'll wrap up, and then everybody that requested it, we'll get you signed up for Thursday's class so we can really hit the ground running. We can get away from this lag, because we're gonna have to fly through charts, so we'll make sure that everything's dialed in, so you guys can have a great presentation. So I do appreciate everybody. I sent out the questions, or not to check the checklist again. So if you don't have it, you can download that, save that link. It should be in an announcement section, and we'll take the best care to ensure that we deliver an amazing presentation to continue what we talked about today. So appreciate you all. I wish you happy trading. Appreciate everyone's patience. And I promise everyone will be set up for Thursday, and we'll get you all taken care of. So appreciate you all. Have a fantastic rest of the day, and we'll see you live again on Thursday at 12 p.m. Eastern Standard Time. Thank you all.